Hello everyone and welcome to this weekly technical analysis video here at xm.com. So starting from the most important event of this week, which is the US PCE price index, which is coming out on Friday, and this will be closely watched by dollar traders. As for the PCE rate, there is no forecast for the headline rate at this time, but the core rate is expected to have stayed the same at 4.7% year on year. So looking at dollar index, we can see that the price is moving slightly lower below the short-term SMAs and approaching the 101.50 support level ahead of the 100.64. On the other hand, any movements above the short-term SMAs, then it may reach the next resistance level such as the 104.70 and the 105.40 ahead of the 200-day SMA near 106.38. Looking now at the technical oscillators down here, the MACD is holding beneath its trigger and zero lines, while the RSI is pointing down in the negative region. So moving next to the Eurozone, flash estimates for March are released also on Friday. Headline inflation may have dropped below 8%, but the more pressing concern for the ECB is the persistent increase in core inflation rates. So euro and dollar rebounded off the 50-day SMA and around 1.0760 support level and is currently holding above the 108 psychological mark, with the next barrier coming from the 1.930 barrier and the 1.1030 resistance. Alternatively, if the price drops beneath the short-term SMAs and also below the 23.6% FIBO of 1.0680, then it may reach this uptrend line here around 1.0620 ahead of the 200-day SMA, which is holding around 1.0557 ahead of also the 7-week low of 1.530, and it may switch the outlook to bearish. The MACD is standing above its trigger and zero lines, and the RSI is pointing up, mirroring this latest upward movement on price. And finally, in February, Japan's inflation rate dropped sharply, making it less important for the Bank of Japan to scale back its stimulus policies even more. The core CPI in Tokyo is expected to continue to drop a little bit in March. So looking at dollar yen, we can see that the price bounced off this short-term uptrend line here, with the next barrier coming from the 23.6% FIBO at 132.95. And also we had a bearish crossover within the 20 and the 50 days SMAs, which is also acting as strong resistance around 133.60. If there is a climb above this area here, then the price it may challenge this significant levels here of the 38.2% FIBO of 136.66 and the 200-day SMA around 137.43. Even lower, if the price drops beneath the 129.80 support, then it may change the outlook to bearish in the medium term, meeting the 128 and the 127.25. The RSI and the MACD are also endorsing a negative structure, as the RSI is pointing down in the negative region and the MACD is losing momentum beneath its trigger and zero lines. So that's all from me. Thank you for watching and have a great day.